Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of VeChain, taking a look at what's been going on most recently with the price action of the VET token and what I think is likely to happen next. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is down in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video, kicking things off with the 1 hour time frame. So here we have VeChain paired up with USDT. We're actually using the 1 hour Binance chart for this one today, just to kind of keep things consistent as we go across the different time frames here. So as we can see, we have this move to the downside. It's very corrective in the way that it's gone. We can go ahead and just do some sense checks in here, okay, from an Elliott Wave theory point of view, and then we'll jump over into smart money. Here you can see that we are still looking for a potential move a little bit deeper in the price chart before we start to bounce up. Okay, so our target range to the downside here is still sat between 1.562 and 1.516, right in this low range. If I go ahead and remove that, you can see, and then of course I will go ahead and draw on here A, B, and C, so you can kind of see the structure to how this is moving. Now, from an internal standpoint, if we take a look at the C wave pattern, the minimum expectations have already been met. Our typical expectations would be more between 1 and 1.236. That would actually put us down here between the 1.551 and 1.581. Okay, that would be the kind of range that you'd kind of expect to see. Now, as you can kind of see here, this internal workings, if I have this structure come on in, would basically be a little bit of overlap with our slightly higher range. So we were expecting a bit of a push to the downside. Smart Money Concepts tells us that we are in a bearish structure, as you can kind of see here, but it's yet to be confirmed. In the same way that we were bullish over here, but it wasn't confirmed either. Okay, so we know that we have the potential here for the structure to confirm it's bearish. We are above the 50 SMA and the 50 EMA. However, we're finding resistance on that 200 EMA. The 200 EMA also happens to be equilibrium. So essentially, this is the natural area for rejection, and we should start to see a bit of a pullback from this range. This also is an overbought area on the stochastic RSI. So confirmations of everything are saying that we are likely to see a continuation to this move to the downside, just a fraction further before we start to rally back up again. So I do expect us to move up, but I would expect it to be more from this lower range, somewhere realistically between 1.581 and 1.516, anywhere in these yellow boxes essentially, and then we can start to see that lift to the upside. If I were to trade it, that would be a pretty good long position, I think. I would probably be looking at trying to enter long, let's say up here. We'll give that stop loss below the recent swing low. That should hold, and I'll take profit up at that swing high. That's going to give us about a 2.15% risk reward ratio, or 2.15 risk reward ratio, and that's going to be probably how I would approach this one if I were to trade it. Could be pretty profitable. So we are expecting further downside, and we'll go long. We could of course short the market as well, but it'd be tougher on the stop loss and a pretty poor risk reward ratio as well. Let's take this out into the daily time frame for VeChain here, and as you can still see, we are targeting out this Z wave. The Z wave is between 1.121 and 1.548. That hasn't changed, still very much on track for this. This deviation to the upside here really isn't a deviation. We are still looking pretty bad in terms of where we're heading, but I think we are likely to see a significant bounce upwards, probably more towards the 200 EMA at some point on the daily charts. So we'll finish off that correction on the hourly over the next few days and week maybe, and then probably over the next month or so be heading out more towards 1.875 cent, which will be the 200 EMA, where I then expect us to move on down. So if this is the case and we were to rally on up towards our 200 EMA here, then we are going to be targeting out the lower range of our Z wave pattern between 1 and 1.236. So essentially, I think that everything in here is kind of following where we think it's going to go. It's going to be moving to the downside, something to this effect, which means a new bear market low point for VeChain. This isn't a surprise, or shouldn't be a surprise. This is stuff that we've been talking about for quite some time. If I zoom out of this, you can kind of see that we have this downward trend line as well on the daily time frame. You can see here that it's been pretty consistent. We haven't have actually broken above this trend line as it is currently drawn, but just the problem with trend lines generally, we can go ahead and just adjust them, and all of a sudden we're still in the bearish structure, right? And this is the problem when it comes to the trend lines, is they're subjective to whoever is drawing them. That's why I don't tend to like them too much. But ultimately, I think we're still in lower highs and lower lows. We are bearish. Our smart money concepts is also bearish. I don't think we've had any change of characterizations there. No, all we've got is confirmations of the bearish state of play. So we continue to move on down to complete the structure. The Z wave should be the bottom, in my opinion, and then from there we should rally on up. Do have the possibility of dropping down deeper than what is symbolized here at 1.1, but I'm hoping that that is where we hold. If it doesn't, then we are looking at sub 1 cent VeChain before we start to see a rally to the upside. Take this out into the weekly time frame. You can see how bearish it can get to 0.00811. This area here is previous area of support and resistance. So I'm looking at this essentially as the most bearish situation to find ourselves in. I don't think we're going to go down that low, but it's something that we have to kind of consider. Essentially here, I think on the highest expectation would be around that 1.1 cent range. Other than that, I think for the most part, we are looking okay. And I do expect us to perform reasonably well in that next bullish market as we kind of see some decent progression to the upside to be had here for VeChain. A lot of work is happening on the background. If you're not following all of the interviews and things that we've been doing with VeChain, then it's probably worth checking out a lot of that. Some real good stuff that is being built, and a pretty bright future for VeChain overall. So why not check those out there on the channel? And I think, yeah, that'll wrap up today's video. If you found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.